Hi guys, my name is Chris and I am the last reporter for Group 9 and I am here to talk about Securities Regulation Code Rule 68. So first slide, general financial reporting requirements. So companies that meet the following threshold are required to file financial statements in SEC. First, we have stock corporation with total assets or total liabilities of 600,000 pesos or more. So, example of stock corporation in the Philippines are Ayala Corporation, ABS-CBN Corporation, Bank of the Philippine Islands, and many more. So, if 600,000 pesos or more ang ila total assets or total liabilities, then they are required to file financial statements sa SEC. And then, we have non-stock corporation with total assets or total liabilities of 600,000 pesos or more. So for SEC, non-stock corporation is a corporation with no authorized capital stock and no part of its income is distributable as dividends to its members, trustees, or officers. Example of non-stock corporation are like labor organization, business leagues, and education organization. Third, we have large and or publicly accountable entities. So, they are permitted by SEC nga mag-file lang sang set of financial reporting framework other than the full PFRS for specified subclasses such as banks and insurance businesses of these entities. Lastly, we have medium-sized, small, and macro or micro entities. So they are exempted or they are not required to file the financial statement under Part 2 sang SRC Rule 68. They are not in the process of filing their financial statements for the purpose of issuing any class of instruments in the public market and are not holders of secondary licenses issued by regulatory agencies. And in the event wherein an entity breach the prescribed threshold in terms of total assets or total liabilities, and thus it falls within a different classification, the audited financial statements of said entity shall be prepared in accordance with the higher framework. So next slide, we have accreditation categories. So we have three accreditation categories: Group A, Group B, and Group C. And under the relevant category, the following regulated entities must have independent auditors accredited by the Commission. First, we have Group A. So it includes those issuers or of registered securities that have sold a class of securities after registering under Section 12 of the SRC, with the exception of issuers of timeshares, proprietary membership certificates, and non-proprietary membership certificates, which are included in Group B. And this category also covers those corporation nga ma-apply registration for this securities which sang una hindi included sa ini nga category. Then, we have those issuers whose securities belong to a class that are listed for trade or an exchange. Lastly, we have companies that belongs to these categories are those company that are publicly traded nga may total assets of at least 50 million and may at least 200 shareholders, and kada isa may at least 100 shares sang particular class of equity instruments. For the next slide, we have second category, which is the Group B, and it includes issuers of registered timeshares, proprietary and non-proprietary membership certificates, and corporation applying for the registration of such securities. And we have investment houses, brokers and dealers of securities, investment companies that are not in the process of registering securities or have no registered securities yet. And sang una, before this was revised, investment companies lang na di siya. We have government securities eligible dealers, universal banks registered as underwriters of securities, investment company advisors, special purpose corporation registered under the Securitization Act of 2004 and its implementing rules, and such other corporations which may be required by law to be supervised by the Commission. Next slide, we have the third category, which is the Group C. We have transfer agents, and what we mean about transfer agent here are those that work for the security issuer to record if may changes sa ownership, and like sila maniga-maintain sang issuer security records, ga-cancel, kaga-issue certificates, kaga-distribute dividends. And transfer agents are usually banks or trust companies, but sometimes a company acts as its own transfer agents. So there are some cases that company is the transfer agent itself. And for the next two, financing companies whose assets in the preceding year are above 10 million pesos. Do may changes lang na di gamay in terms sa technical description before it was revised. Same with lending companies whose assets in the preceding year are above 5 million pesos. And for last two entities, before, they are not part of Group C category but now included na siya. Those are non-stock, non-profit corporation including foundations which solicit or receive annual donations or contributions and or with fund balance amounting to more than 25 million pesos and 100 million pesos respectively over the preceding 3 years or such higher amount that the Commission may set through order or guidelines. And lastly, for Group C, we have such other corporation that the Commission may consider with public interest regardless of the lack of requirements to obtain a secondary license from the Commission. And now, for the next slide, we will talk about scope and limitation of accreditation. So, the auditing firms, including their respective signing partners, who shall be engaged by companies under A, B, and C, must be accredited by the Commission in accordance with this rule. It means i-investigate or accredited danay by the Commission before being hired sa organization under Group A, B, and C. And if an auditor has demonstrated their ability and resources to create and implement effective audit, quality controls, in compliance syempre sa applicable standards and other rules and regulation nga prescribed sa Commission, then the sole practitioner may be accredited by the Commission and may engage by Group C companies. And then, third slide or third bullet, during sang processing of the applicant's application, ang nagamit is risk-based approach to evaluate ang financial statements ng applicant's corporate clients. And for this kind of evaluation, ang importante lang is ang financial statements and any attached schedules. It does not consider the financial statements, supporting documents, and to support the auditor's responses to the comments on the evaluated AFS, the Commission is still free to seek copies of the audit work materials. Next slide is still under scope and limitation of accreditation. We have the Commission, so subject to SOAR inspection program, the accredited auditing firms engaged by companies with equity or debt securities listed in an exchange and review portions of this firm's audit work for the listed companies. The Commission, however, is not precluded from subjecting the independent auditors of other companies for inspection as the circumstances would warrant. And as per SEC, ang purpose of SOAR or SOAR inspection is para ma-improve ang quality of financial statements audits of publicly traded corporation. And we have the accreditation of an auditing firms partner or sole practitioner shall be effective unless if ang auditor's request for withdrawal or accreditation na-approve ng komisyon. Second is if ang accreditation na-suspend or na-revoke ng komisyon after due notice and hearing for failure to comply with the SOR requirements or for such other grounds as provided in this rule. Last exception is if na-expire na ang BOA or ang BOA registration and license kag wala application for renewal has been filed with the BOA. And lastly, accreditation under Group A shall be considered a general accreditation which shall allow the independent auditor to also audit companies under Group B and Group C. Independent auditors with Group B accreditation can likewise audit companies under Group C. Only accredited partners with accreditation under the appropriate group category are allowed to certify financial statements of the firm's clients with secondary licenses. Next slide is our next topic, which is reportorial requirements. So, wala changes sa provision except for the following. And need na sang komisyon sang additional disclosure that must be disclosed by the audit committee or company's chairman of the board if any finding of violation of SRC Rule 68, offering of securities without prior registration with the commission under the SRC, or engaging in the business of financing of lending without a secondary license. Second, any material finding involving fraud or error. Third, losses or potential losses, the aggregate of which amounts to at least 10% of the consolidated total assets of the company. Next, any finding to the effect that the consolidated requirements or consolidated assets of the company on a going concern basis are no longer adequate to cover the total claims of creditors, and material weaknesses in internal control which may lead to financial reporting problem. Next slide. It means commission must determine if ang inaccuracy or incompleteness is serious enough nga mag-demand another financial statements. Kag once na-receive ang commission's order, any reassurance is needed within 45 calendar days. And this change must adhere to the applicable auditing standards, reissuance requirements. The Commission will forward the issue of whether or not to reissue a bank's and an insurance company's financial statements to the BSP and the IC respectively for further actions. Corporation not covered by the aforementioned regulations may reissue their financial statements as long as they comply with the standards as currently in effect. However, public issuers of securities are not permitted to reissue their AFS without first requesting and receiving permission from the Commission, BSP, and IC as appropriate. And then, for the next bullet, a corporation subject to SRC Rule 68 Part 2 that is reissuing its audited financial statements, AFS is required to notify all parties affected, including its stockholders, creditors, and investors, of the amendment by publishing a notice in a newspaper of general circulation that specifies the amendment's costs and the fact that the financial statements have been submitted to the Commission. Lastly, the Commission and the auditors are not exempt from the fine that the Commission may impose on a corporation as a result of substantial flaw or misstatements in the original financial statements by the amending or reissuing the financial statements. So yeah, that's it for my report. Thank you guys for listening. God bless.